Back again at OMG Market Analysis for Beginners. I am a beginner, and we are going to fix a typo and talk about groups, and we'll get to what that is. Momentum change for this week and the end of last week. We're going to look at 4 stocks that are all sort of in the technology sector but are different. We're going to look for pattern changes, pattern similarities, all with their moving averages 20 and 200, mostly daily charts, distant past lookalikes. We're going to try to find out, where did this happen? In the case of Apple, where did the same pattern break? And then did the other stocks do what they were doing? And then what did it all look like after that? So we can try to find out whether we are going into a trading range, up and down for a while for another crash or another rally, or we're going to get more heavy losses tomorrow and the next day. It could be is it going to be one of the worst weeks in forever, or is it going to be like, oh, well, maybe not, maybe, yeah, I'm not sure. Are we going to retest the highs from last Wednesday? And then this week's reports we're actually going to get to first, because we're going to consider what is it that made today go down? Was it reports? And then we're going to look at the reports for tomorrow. GDP is Thursday, I think. Jobless claims Thursday. And we got to remember that if it's kind of bad news, but it's not as bad as people thought it was going to be, they will actually go crazy and it might go up. Semi-bad news is good news. That's what happened when the CPI went from 9.1 to 8.7. We got a huge rally. Like, what the hell? Does that make sense? No. Okay, so, and I also have a new browser add-on that is for drawing over charts with freehand. Okay, so let's go to it. The economic calendar. Today we had nothing particularly, no red dots. Red dots are the most, let's try this. It's not working. Red dots are supposedly the really big ones, right? Wow, that was terrible. The reason I'm so confident just jumping right in this is because I've been drawing a lot over the last 5 years, so I should have a really steady hand to make good things. We're not even looking at durable goods. I don't know why I circled that. GDP and jobless claims, okay? So these 3 right here, this is going to someday be a really good way to do it, okay? So we didn't have anything going on. Why did we have a crash? All of a sudden, there's news articles. Let's go right over to news. That say that the reason we had more losses this week, cinemas cut energy bill, okay, plan. Ford is doing layoffs, and they're using their split of their EV stuff to hide the layoff. Right here, job cuts. Euro dropped below the dollar for the first time ever since the euro was invented in the mid-'80s. That seems significant to me. That means the dollar is so strong, and when the dollar is too strong, stock market goes down. Ford cutting through 30 jobs. I don't see where it is. Bed Bath & Beyond fizzling. We should have covered that. Oh, here it is. U.S. stocks hit session low in the afternoon, trading as possible Fed moves weigh in on investors. Okay, the Fed already said they were going to rate hike again. They already said that last time they rate hiked. That is not news. There should have never been a rally just because the CPI went slightly down. It's just that, like I said, people got let off the leash. They're going to gamble some more because they know they have a month and a half more before their head explodes. Worst daily drop in 2 months. Yeah, so this is stuff to look at for beginners. Just kind of scan through this, get used to seeing this stuff, which ones spark your interest. And then let's go to the article that said stocks tumble on fears of another big rate hike. Let's try my thing again here. Oh, no, that's going to crash it. Okay, that sucks. Well, I didn't want to do that because, oh wow, the mouse wheel still works. It's a miracle. All right. So much for hopes that the Federal Reserve will tap the brakes on its growth. There was never hopes. They never said that. They said that they, in fact, were not going to do that. And nobody should think they could do that. The tiny drop in CPI from 9.1 to 8.7 is nothing. Why would the Fed pivot on that? There was never any hopes of that. It's just people saying, well, maybe they will. Now we know they won't. We already knew they wouldn't. So we had a huge rally just because we like to gamble. Stocks tumbled Monday. Okay. So that is not just because Jerome Powell showed up in the Grand Tetons and said, here's some mountains. I know how to draw mountains. The Grand Tetons, and said, oh yeah, no, it's coming. It was already coming. Like 6 different Fed members already talked and said, no, it's coming. Okay. 4-week markets have rebounded in July. They didn't. We're going to talk about that. Okay, let's go straight to the group screener, which is an interesting thing I want to talk about. Notice how over the whole year, energy and utilities and energy, that's over the whole year. But recently, energy was way down here in the 3 months, okay? Let's try my thing again here. So this is what everybody's transitioning to right here, half year, okay? But in the last 3 months when we had this rally, these things were doing really well. Then, and in the last month, it was mixed. We had technology in the middle, energy was at the top. People are buying energy. So even during the rally, people started transitioning to energy, even though they were still buying these. Okay. Now in the last month, which in the last week, when everything was crashing, energy was not crashing. Okay. If you had bought energy stocks, you'd be doing good. So it doesn't, when things are crashing, it doesn't mean you have to sell short. You can still buy long. You just have to buy the thing that everybody's transitioning to. Okay. Okay. One day, everything bad, energy still in the green. Okay. Utilities are really bad today, even though overall. So this is just something to note about sectors. In this one thing, you can figure out that over the whole year, utilities have been it. Utilities and energy. And then right here, just in that last rally, it was technology, industrial, cyclical. Nobody wanted to do utilities and energy. They don't really like it because it's a dividend. It's not a growth. Okay. And then that's it for that. Futures, we have to look at this every time. Lumber's down again because, sorry. What we're going to see, it's going to be down more. New home sales, it's been down. There's reports the housing industry is crashing. Lumber, which is the housing industry uses, okay, that is crashing. Look at lumber. Bam! It's like that almost every day, or 8 out of 10 days. S&P 500, big red, okay? There's days when it's green. Healthcare, there's one healthcare. So these are things you should just kind of get used to looking at. I'm not going to go into it. We're going to go right into Apple, because as we all know, Apple is the biggest part of the QQQ of the NASDAQ, and we had this big run, and now we have a huge gap down. Thursday was even, Friday red, Monday red. Okay, so our goal is to look at it like this and to say, why would we think there would be 2 red days there? Okay, we had one little green bar. Turn on my drawing. We had momentum here, momentum change, and a momentum up. Now, even if we got flat or drop, why would we think that we're going to drop all the way down? Why wouldn't we think that we're going to keep going up eventually? Let's look back further, if this thing will let me, and say, when this went up in the end of 2000, and it dropped way back down like it's doing now, and then it got a higher high before it dropped. So do we say this was the sign of things were getting bad? We reached a very high. We were above this 20-day. We touched it. Now that we touched the 20-day, why do we think it's going to go down? Below the 20-day and down some more and down way down to here and actually hit below the 200-day. Why would we think that that would have happened when we were back here? Okay. We have to look at the volume, and we have to look at the way it made a higher high and a higher low. And we have to try to draw trends here. That's a problem with doing that, is that those things don't no longer line up. If we go all the way back to last time it made a high and then crashed. It looks weird because you've got that. But when you slide it over, then you get this. Okay. This is what we want to know about. Where it crashed, it did a rally again, and then it crashed, and then it crashed way down. Okay. So if this was the crash from earlier, 3 months ago, 2 months ago, 6 weeks ago, and then we got our summer rally, which we've been doing, and now we're right here. Okay, we're right here with some red days. It could do this, stays even for a month and a half is what that is. That's a month and a half. And then it crashes some more. It could do that, right? That's one possible scenario because we have evidence of that. Maybe it's going to crash. Maybe right now it's just going to go shoo. We don't know. But at least we know that that is what it did in the past. Here it made a higher high, and then it went boom all the way down in red. A little bit up, all the way down. So it could do that. These are scenarios. You have to look at the past before you draw out your scenario, because regardless of which one it is, we want to know how much it went down, right? Because we need to know when to get out of our trades, even if they're good trades, right? So let me get back here. So here we are, 6 month. These are all in the 6 month. We're going down. Let's move to NVIDIA. This one has already been trading in a range. It did not have the big run like Apple did. NVIDIA's had all kinds of different kind of news, and the chip, it's a more volatile stock. It's a more purely tech stock, whereas Apple's in banking. So here we've got, downward. We have some upward. You don't get to go this steep because we had this. So this is, and then we have downward. Okay. Now we have sideways down. It's flattening out. Oh. So the question is, when we look at these bars, how do we know if we're going to get this again? Or are we going to get this? Talking about the rest of this week, talking about this week and next week. This is what we're looking at. We want to know whether it's going to look like this or whether it's going to look like this, because that means how long do we hold on to our shorts? Can we sell puts and calls? Can we just buy puts and have a far strike price, which is like 40 points away, which is a cheap put? We need to make a guess on that. We look at the volume. Right now, our bars are really low. this red and this red. Sorry if you can't see this. Here, we had low bars too. And then we had a higher bar. And 5 red bars in a row. Right now we have 2 red bars of volume. Here we had red, green, red, 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 green, red, red, green, red, green, 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 red, 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 okay, before we got another big crash. So we need to have a green day in here before we can say, hey, this is starting to look like this. If we get another red day, it's this and it's this, okay? Let's move on to Microsoft, because this is a strong stock, unlike NVIDIA, which is not a very fun stock to be in because you don't know what it's going to do. It's very volatile. Here we've got similar to Apple, but no big rally. So why did Apple rally hard, but NVIDIA didn't rally hard, and Microsoft only sort of rallied, and now it's dropping off, just like Apple? Well, Microsoft's in the software business and in the technology sector. Apple's in the technology sector and in the banking sector. These red bar, we got 5 of them in a row. 5 of them volume, and then so we're trying to get evidence from Microsoft to make decisions about Apple, because Apple's the one that has a long way to go down. Okay, it had this big run. It has a long way to go. Whereas Microsoft, well, maybe it'll just go down to here. We're comparing these. Snapchat's a very different stock, but it saw the 2 red as well. It has this tiny run and back down. The reason I pulled up Snapchat is because we need to look at a stock that is absolutely in the shitter. All stocks can end up here. Okay, Snapchat's books are bad, so are other companies. There's no reason to think that Bed Bath & Beyond was any stronger of a stock than Snapchat. Their fundamentals and their balance sheet are pretty terrible too. So where can this go? It could go down. I think it is at 9 right now, or it dropped down to 9. So it's got lowest lows. That's another thing to look at. Look at this right here. That would be your first guess as to where this thing will hit before it stops. So if you're going to buy a put, you want to make sure that your strike price is like a little bit above that. Maybe way up here, maybe like right here. NVIDIA, if you're going to buy, where is this going to end up? Here is our line down here somewhere. So if it drops, it's going to drop down to there. It's not going to go straight through that. Probably won't. Just like Apple. Here's the line right here. Okay. Draw that line. And that's it. Good luck. Can't think of what else I was going to. These groups are my most interested thing, to see how people are switching to energy, which means that even if that's a momentum, it's a momentum into energy that will carry. So even if things even out, we should see some slips in the technology stocks, even if everything's kind of going up. If the S&P 500 kind of stays flat, that means that Apple should drop a little bit, because people are moving into energy stocks. All right. Good night.